During the financial crisis, Canadian insurers and financial companies lost far less than their U.S. and European counterparts. Canada's biggest insurer, ManuLife, wrote down about $2.6 billion in credit losses since 2007, a fraction of the almost $250 billion in insurer write-downs worldwide. And to preserve capital, the company, the largest in North America by market cap, cut its quarterly dividend for the first time in August. Joining us to discuss the company's future plans and his outlook for the industry is CEO Donald Guloien. Welcome to you.
Welcome, Lori.
So based on what you're seeing in your business, characterize the economy. What stage of recovery do you think we're in right now?
I think we're mid-stage. We're not anticipating a V-shaped recovery. We think it'll be a long, slow build, but the positive signs are certainly there. Can I correct you on one thing, though?
Of course.
You said credit losses, and I'm very protective of that.
Of course, please do.
The only significant losses ManuLife suffered were guarantees associated with its variable annuity business. And, where we've guaranteed people certain credit market outcomes in terms of their stock market investments. So we're kind of proud of the fact that the worst thing that we ever did to create a loss was to our policyholders' benefit. Our credit losses have actually been minimal.
Yet you are talking about building up this so-called fortress capital to protect against future equity market crises or declines, we'll call it, on the heels of the credit crisis. So how much capital are you looking to raise for this fortress capital, and how will you raise that money?
Well, people's view on how much capital is enough is evolving as we speak. Whether it's Basel or Solvency II that's emerging in Europe, or whether it's the Obama administration's view of systemically important institutions. Regulators everywhere, rating agencies and the general public are requiring more capital. We frankly don't know where that's going to stop. When we know the end game, when we know how comfortable regulators, rating agencies, and the investing public are, then we'll have the answer.
Will you cut the dividend further?
We have no plans to cut the dividend further. We gave a great deal of consideration to cutting the dividend. And, we knew that if we ever had to cut it a second time, that would not be a desirable outcome. So we have no plans whatsoever.
But, Mr. Guloien, you were also in our Bloomberg story today reiterating that ManuLife may increase its dividend in, quote, normal markets. How do you define normal markets?
When we are satisfied that we have fortress levels of capital, when we truly know what capital levels will be required by regulators and rating agencies around the world, and we're comfortable with our growth in normalized earnings, that would be the time to increase dividends.
The Bloomberg terminal has this dividend forecast function, and it's predicting a dividend increase by 2011. What do you think of that?
Well, I love Bloomberg. I pay a lot of money to Bloomberg for all the terminals we have, so I assume everything you guys have must be right. I said to our CFO, you should take down those numbers, Mike, because they're doing the job for you. I think that reflects, all kidding aside, I think that reflects a very, very optimistic outlook that a number of our investors have and analysts, for ManuLife earnings over the longer term.
From dividends now to acquisitions and future plans there. You've been talking acquisitions among the regions you've identified already: India, China, Europe, Korea. Which do you think presents the greatest opportunity?
Frankly, in the short term, we see huge opportunities in Asia and North America, basically our home turf. As a result of the financial crisis, there's more near-term opportunities than, we've seen in a long time.
And this is so interesting. You actually have ManuLife employees on the ground in these regions looking at opportunities. Why are you going this route? What directions, what instructions are you giving your own employees? And why not just use an investment banker to do some due diligence?
Well, I'm not going to speak ill of our investment banking colleagues. We bring them in if we have to towards the end of the deal to help us get a transaction done. But our strategic analysis of opportunities is done by our own people, and the sourcing of most opportunities comes internally.
Mr. Guloien, what metrics are you seeing in global economies that give you pause to say that, well, as Lori mentioned, maybe some of these other regions might be a place where ManuLife might want to get started?
Well, it's not getting started. We've operated in Asia for over 100 years.
I mean new openings, not what you have, but new openings, new opportunities.
Yeah, well, most of the new opportunities come as a result of the financial crisis, where companies have been weakened by what's happened, and they're selling off an important part of their business, or in fact, perhaps all of their business, to a stronger partner. That's how we see most of the opportunities emerging.
You haven't said much about expansion or acquisition plans in the U.S., yet John Hancock is a unit of yours. Would it be a good time to expand that?
Yeah, I think as a result of the financial crisis, there will be opportunities in Asia, Europe, and maybe even Canada as well.
But here in the U.S. with John Hancock?
Yes, of course.
And how would you expand there?
Well, what we'd like to do is we think we have plenty of equity risk, as we talked about before. We would expand into anything that we have the skills for that is, not adding to our equity risk.
One area of your Canadian platform doesn't get a lot of press is ManuLife Bank.
I've got the ManuLife cufflinks on. ManuLife
Oh, how do you get one pair of those?
Well, I'll give you a pair if you'd like them.
Those are really classy. Very cool. So ManuLife Bank doesn't get a lot of talk, but you've lent, I think the figure is 5 billion Canadian dollars last year.
Yeah.
What's the end game there? What's the ultimate goal with the banking unit?
Well, we're exploiting a wonderful opportunity in the Canadian banking industry. It's a very low-risk business for us. We have a more flexible mortgage option for people that allows them to prepay their mortgage typically, and it can be half the time of a conventional bank mortgage. It allows them to utilize the cash balances float in their essentially checking savings account to bring down their mortgage balance outstanding.
And sir, if you will, just for a second, if you're talking about mortgages, what is the housing market looking like in Canada? What sense are you getting?
Well, the housing market is, surprisingly solid. It has diminished very little. And, I should point out that the mortgages that we offer are at a rate where, in terms of the loan-to-value ratio, those are guaranteed by government authority. So we have very little credit risk associated with these mortgages.
You've also been increasing levels of government debt over the last year, particularly in the U.S. and foreign bonds. Why have you been doing this?
Well, spreads have been attractive over the last year. Some of that comes as a result of currency valuation. Our financial statements are expressed in Canadian currency, and
Sure.
That has the impact. We've seen credit spreads narrowing, which increases the values of our bonds.
Cash, short-term securities, same time are down. Why?
That's more seasonal factors and things like that. We hold plenty of cash. We have huge amounts of liquidity in our company.
Mr. Guloien, as you're no doubt aware, President Obama and Prime Minister Harper held talks at the White House just recently. Give us a sense of the dynamic of the relationship between this new president and Stephen Harper in Canada.
I think the dynamic is good. The relations between Canada and the United States has been, something that people should be proud of everywhere in the world, how, neighbors can get along so well. And, we see tough times and, better times, but I think the relationship is very good. I would say a fair amount of it is also, due to the great job done by our Foreign Service. Our ambassador to the United States, Michael Wilson, has done a superb job representing Canada and the United States, and so has his counterparts in Canada.
As we spoke about earlier in the interview, you were successful in avoiding much of the debt-related write-downs during the financial crisis. AIG obviously did not have as much luck or foresight as you had at ManuLife. What did you learn? What lessons did you learn that could play a role in how you evaluate the risk you'll take in the future?
Well, there's a whole bunch of things. We have never been comfortable with the riskier end of the fixed income spectrum. The payoffs are very small, and the risk can be very, very large. We also don't put all our reliance in a single source, whether it's rating agencies or other mechanisms of rating debt. We tend to be, less quantitatively oriented.
Okay. We're going to have to leave it there. ManuLife CEO Donald Guloien joining us here on set in New York. Sir, thank you very much.
Thank you.